I think last night the sell-off in the Chinese ADRs in the US is basically leading to weakness, general market weakness today in Hong Kong. And on top of that, you had the strength of the dollar last night actually playing a role as well. The dollar index and the Asia ex-Japan equities market, the inverse correlation is actually still very, very strong. So whenever you have the dollar actually testing new highs, you are likely to see weakness in the Asia ex-Japan markets. Now, from where we are concerned, we think that this is a buying opportunity. Because if you look at the results of the Chinese internet companies that have actually come out recently, there's really nothing wrong with the companies. I mean, the results are fantastic. They've more or less beaten expectations. And therefore, this is not a company-specific issue that you're looking at. On a broader basis, there's, of course, the overhang coming in from the antitrust regulations coming through, and the fact that, the Chinese government is looking into controlling the personal data that is actually being collected by the Chinese internet companies. That in turn basically means that it's going to be difficult for these companies to be able to actually monetize the data going forward. And that's one of the reasons why the market is looking to be quite range-bound and a little bit weak on a short-term basis. But again, on a longer-term basis, we do think that China is actually a very attractive market.
So would you say it's a buying opportunity even if the US dollar keeps on strengthening?
Yeah, we do think that there is a limit as to how strong the dollar can actually go, and we think that we're probably more or less there vis-a-vis the euro. And on top of that, the US dollar against the Asian currencies would not fare as well because of the fact that the Asian currencies, in particular the developed Asian cities, the currencies are likely to fare better this year against the US dollar. In fact, we do think that where the Chinese yuan is concerned, we do see the Chinese yuan hitting about 625 against the US dollar by the end of this year. And that in turn should actually provide some sort of a tailwind for the Chinese A-shares index in particular because of the pretty strong correlation between the A-shares index and the Chinese yuan.
Kelvin, good morning. Thank you for joining in this conversation. Do you prefer techs still over some of the recovery plays in this recovery cycle through the pandemic?
Yeah, I think on a short-term basis, you're going to get a lot of the flows going into the reopening stocks. I was just looking at the industry-wide report on the US REITs and hotels market last night, and you can see that the average revenue per room has actually gone up very, very strongly. And yet that's despite the fact that occupancy is still at about 59 to 60%. And there's room for that to actually increase further as the economy reopens, weather gets better, warmer, and more of the Americans actually start to travel. That in turn, I think, is very symbolic of what happens when you have a recovery coming in as a result of the pandemic itself. And I do think that the rotation into the reopening stocks will also continue to flow into Asia. And of course, the flows going into the value and into the cyclical stocks as well will likely continue. And a lot of that is actually coming in from the tech sector, which was actually very crowded and very widely owned at the start of the year.